Okay.
In cash, I know because I like to watch it flow. When I ask valuation, I want no hesitation. Are you worth $10 million? Hell no.
Today, folks, Kevin O'Leary has largely become one of the most influential people in the financial community, and I highly suggest you scroll on over to his YouTube channel, but most people are unaware that you can actually invest alongside his money in his own portfolios publicly displayed as OShare ETF investments. The highly promoted one, obviously the best performing one, being OGIG, which tries to represent, obviously, the technology and cloud computing. We're going to go through that along with all the other portfolios from his Dividend portfolio, the one that matches the S&P 500, and just see how well it's doing going into 2021 here, folks. And then, as always, at the end of this video, I'm going to offer you my humble opinion. So do the channel a favor, consider hitting that like button, and let's get right into this. Welcome back, but passive income investors alike. And getting right into this, one of my favorite things about Kevin O'Leary is he's a highly focused dividend investor.
What's the value of a stock that never returns capital to its shareholders? I don't know, because the only way you can make money is if somebody else is willing to buy that position at a higher price for some emotional reason, perhaps. The only thing that matters is free cash flow. That's it. There is no other reason to own a stock. And with that philosophy, it brings you into a place where you focus on a company's ability to generate incremental cash flow.
And most of his ETFs are focused around dividend plays, kicking it off with the premier of the bunch, trying to match the S&P 500 with the OShares US Quality Dividend ETF, ticker symbol OUSA, which on the Google chart is trading up about 58% over the last 5 years, roughly matching the S&P 500. And just going into the actual ETF listing here, guys, taking a look at the actual management fee is about 0.48%, which is what we're going to see across his entire ETF portfolio. Compared to something like the Vanguard indexes here, guys, this is a really high expense ratio. Typically, you're gonna get about 0.05% off of those. So this is like 10x what you'd be getting with Vanguard. And honestly, anytime I see a 0.5% fee, usually I'm looking at something like a Cathie Wood at the ARK Invest, the innovation funds, the genomic funds, that where you're paying those high fees, but you're also getting high performance. But at least with this one, you're getting a dividend yield of 2.04%, and you got to minus out that expense ratio. So really it's about 1.5% on top of that. Relatively decent performance here, folks. And taking a look at the top weighted holdings in the Quality Dividend US ETF here, guys, you got Microsoft at the top, Home Depot, Johnson & Johnson, Procter & Gamble, Merck & Company, Verizon Communication, Pfizer, Apple, Cisco, and Honeywell International, making up 39.1% of the entire portfolio. And I have to say, this is actually really awesome. I would like to own just all of these as dividend stocks. Highly focused, just like my portfolio, being in the healthcare space, and some of the best technology companies that pay dividends, especially putting Microsoft at the top of the list, is almost a 5% weighting. So let's talk about the best performers of the bunch here, being OGIG, the global internet giants, and taking a look at the 5-year performance, where most of it is only kicked off as of 2020, but trading up 120%. Very well performing ETF, and roughly the same deal with the expense ratio. As I said, it's the same across all of them at a 0.48, right around 0.5%. This one you're not getting any dividend yield, but we're talking about full performance. We got Amazon at the top of the weighting, Alibaba, Alphabet, Tencent Holding, Facebook, Microsoft, Pinduoduo, not sure about that company, and then we got Snap, Pinterest, Meituan, I'm not sure what that is either. This one to me is super fascinating because when he's talking about global internet giants, it's really interesting that, you know, instead of having something like Microsoft being in these top weightings, he really just has Amazon, a lot of exposure to China here with Tencent and Alibaba, considering Baba's the second largest holding, which is really kind of staggering in my opinion. I like the fact that Facebook is a larger weighting in here. When you look at portfolios like this, when you're talking about people managing hundreds of millions of dollars, which by the way, this fund is worth $708 million, and the OUSA ETF is worth $614 million. These aren't exactly small funds, but when you're an individual investor like me buying individual stocks, it is pretty incredible to see that these funds are largely made up of stocks that I personally enjoy buying. So it should give you some comfort as an investor. Now, taking a look at the US small cap quality dividend ETF here, folks, trading up about 28% over the last 5 years. This is probably one of the worst performers of the bunch. And just again, diving into the ETF, same management fee, much smaller fund at 125 million. And again, the dividend yield is only 1.96%, so it's lower than the OUSA fund. You're losing that 0.48% of that management fee, so really, again, under 1.5% dividend yield here, folks. And in this one, my mind is kind of against the wall because I really don't understand what most of these companies do in this ETF. I mean, you got DLB, Adobe Laboratories, that works with audio. Not sure why that would be like the largest holding. IPG, Encompass Health, Robert Half International, like all of these small cap companies, again, wouldn't make my list in my portfolio of things I would like to buy. Biotech, Eaton Vents, Snap on Inc., A.O. Smiths. Most of these are much more diversified because these top 10 holdings only make up 22%, so it's a lot less convicted of a portfolio compared to the OUSA and the OGIG, where those top 10 holdings make up over 30% of the portfolio. So clearly this one, much smaller cap, a lot more hesitation in this portfolio for risk tolerance. Very interesting overall. Now taking a look at OShares European Quality Dividend ETF, which is another place I've been trying to get exposure to, and I've actually been looking at quite a few of the holdings in here, which we'll take a look at in a sec. But overall, up only 12.6%. Not that great, putting it right next to OUSM on the worst performers of the ETFs here, guys. Just taking a look, guys, this is the smallest cap of the bunch, only worth $21 million. This one is so small it wouldn't even come up as a blimp on the overall performance if you held all of these. You do get a pretty healthy dividend yield though. This one comes in at the highest yield at 3.63%. So even after minusing out that expense ratio, you're still capping in over a 3% yield, which is super awesome. Taking a look at the holdings, actually I'm pretty happy with these overall. This is pretty impressive stuff. You got Nestle at the very top. You got Roche Holdings, Novo, Unilever, a company that we talk about a lot, Sanofi. What else? We got Snap SE in here again. Ebidoral, I can't even pronounce that one. Ebidoral, I don't know, IBE is the ticker symbol for that one. Novartis, ASML Holdings, and then Investor AB. A lot of these I'm not fully aware of. You can let me know in the comment section below if you know what a lot of these companies are, because I personally don't. But currently the weightings of 33.2% for the top 10 holdings here, folks. Pretty incredible stuff overall, and must say, considering the combined holdings are worth over $1 billion under management. This is where Kevin O'Leary parks the majority of his money here, folks. So this is some pretty incredible stuff. This is where we get to see where Kevin O'Leary puts his money where his mouth is and preaches his philosophies in a public display. It's pretty insane. But for my personal opinion here, folks, for all the guts it takes to open up a public ETF, I always come back to the old Warren Buffett advice that investing in ETFs is primarily a place you go for ignorance, when you don't understand what you're doing. And taking a look at these holdings, I think any investor could come up with their own stocks they like and probably getting equal to or a greater performance, minusing out that management fee here. As I told you guys, the only time I really buy an ETF is in something like the ARC Genomic ETF, because I don't understand healthcare, but I want exposure to certain sectors of the market. And that's when I'm willing to put my money in the hands of managers that have proven performance and are going to manage those funds in a manner that I would not understand how to, because sometimes you got to know when to buy, you got to know when to hold them, and you got to know when to sell them here, folks. What's that song? You got to know when to hold them, know when to fold them, know when to walk away. And I'm sorry, I'm going down a tangent here, folks. But in light of all of this, I pass the question off to you guys. What do you think about Kevin O'Leary's ETFs? Pretty interesting stuff today. So let me know in the comment section below. Stay cool, stay awesome, and I look forward to catching you guys tomorrow.
I would take an offer from anybody besides Mr. Wonderful.
Manish, you're a get the out of here.
Oh!